All right, good morning, good afternoon, good evening, everybody. This is Will Bridges from your team here at 123Trade. This week's client-only trading session should kick off here in just a couple of minutes. I just want to make sure that we've got good audio. You guys should still be looking at Jared Martinez talking with his hands right now. We've got a big prediction I want to launch here today. I actually, full disclosure, already entered and should have taken profit, but I think that I might actually jump in again because I did get confirmation, I think, of the direction that I'm hoping for. And I'm going to show you guys that here today. I don't want to get into too many nitty gritties. I want to make sure everybody's awake before we move too far. Thank you, Carrie, for letting me know the sound is working. Thanks, Neville, Antonio, Moises, Herb, Gabe, Claudia, Trudy, Raj. Let's wake up. I know it's probably some of you, it's like the afternoon right now here and late at night. So I appreciate everybody showing up here today. Well, without any further ado, we've got a dollar drop prediction here, and you guys probably want to know what that's going to affect because we'll just say a lot of dollars get spent every day. Let's get the show going. First things first, got to cover my base. This is a risk disclaimer for those of you that are new to trading. And what it says is if you put your money in the Forex or any market for that matter, your capital is at risk. You have to risk it to get the biscuit. No such thing as a guaranteed trade. Okay, so basically you're going to see me trade with stop losses, and I'm going to talk a lot about, trade sizes and how to care a lot less about each decision that you make so that you can diversify more decisions. And we'll get more into that as we go here. If you have questions, okay, we do these sessions every week. I don't come here to trade with you guys so that I can get better. It's really so I can help you guys. At the end of the day, I do learn in here. I do enjoy it. Actually, the questions that you ask me force me to be a better trader and find clearer ways to think about things, which is really what this is all about. I want everybody to figure out, a better, clearer way to skin this cat and make some money in this market. That's really the whole point. I want to help you guys figure out how to make money, and really the most important thing is how to not blow out your trading account. Okay, some of you, just show of hands, who in here has ever lost money trading? Just a Y or an N. Have you ever lost money trading? We've got more fun. I've got a couple more, one more fun question after this one. Thank you. The first step is admitting it. Second step is making a plan. And I have two. Everybody that has placed more than one trade has probably lost before. Okay, so the point is that you want to be able to set yourself up in a situation where you could even lose most of the time and still make money. Okay, we're going to talk about that a lot in here. I'm going to show you what that might look like in practice, at least the way that I've been taught to do it, in here every week. So by all means, you have questions, silence is violence, ask. I want to make sure that you guys get what you need from this session. Everybody's at a different point of their career, okay? So all of you in here probably have a trading account with either AvaTrade, Place to Trade, whatever. You probably got set up through us. Otherwise, you wouldn't have ended up in here. If you have any questions about your trading account, send us an email to brokers@123trade.com. If it's something that has to do with withdrawal, something like that, then maybe you could just reach out to the broker directly. But if you need any assistance figuring out who to talk to, whatever it is, send us an email, brokers@123trade.com. Also, if you have anybody you want to refer, anybody that needs help setting up another trading account, maybe you just want another trading account for your spouse, whatever it is. That being said, we're going to do weekly analysis in here, as I think I've alluded to lots already. So let's go ahead and get this show on the road. I used to show all of this stuff in here every week. Okay, all these things, this placing your first trade, setting up things, all this stuff is on 123trade.com. And I shall just bring us there real quick and show you guys that. For those of you that haven't seen this, okay, actually this is here we go. So news is a great place for you to get news. Okay, I used to do all these Google searches every single day. All the stuff is here. Okay, videos, all that are on this YouTube page. Okay, so if you come to the YouTube page, scroll down to Forex education for beginners. I think some of this stuff is, well, I wish I would have known when I was a beginner. You know, for example, you know, this MetaTrader 4 walkthrough, it's an excellent backup for the, you know, hot rod of a trading or charting platform, I should say, in Smart Trader. So let's go ahead and get over to the news. Okay, I want to talk about a couple of things I want to highlight today. I do have a little bit of a prediction to share. And first, we're going to go ahead and look at Forex Factory and just see what happened here. You guys see this here? This looks like non-farm payroll snuck up on us today. Today is the first Friday of the month. If you're not familiar with non-farm payroll, this is the United States jobs report that are not farm related. Okay, so this is really the biggest announcement that happens every single month. Okay, is this one every month. Okay, so we added 431,000 jobs. That's good. Okay, unemployment rate down to 3.6%. If you guys look at that here, unemployment just before the pandemic, okay, was pretty good. Okay, you're looking at, you know, what was that, 3.2? Okay, so we're inching back toward, dare I say, Trump administration unemployment levels. At least that's what we're reporting here. That's what we're looking at. That's what the government's telling us, is that things have been going really good. They've been going so good. And you know what that means to me is there might be some movement on the dollar. It doesn't necessarily mean up. Okay, if the news is good, then it might be time to sell. Okay, and that's really what I'm expecting. So we're going to go ahead and look at that here in a second. Let's look and see what else happened this week, just so we can get a little bit better idea. Earlier this week, we had a speech here. We'll see if they said anything cool. There was a significant trade-off between inflation and output. That's very profound of you, Bailey. And I love it when they make these big these big statements here. Bank of England's Bailey says in UK and elsewhere we are facing a very large shock to aggregate income and spending. Okay, this is all very when I make jokes about them being profound, it's because they're not. Anybody in this room that has a brain and has heard any news whatsoever for the last year knows about inflation. So, I mean, if you bought food in the last year, you know about inflation. And frankly, I hope that's everybody in here. But that said, okay, evidence of slowing growth, that's not good, okay? Demand pressures will weigh on domestic inflation. Okay, so this means that they might have to take a very tight money policy is what that means. Whether they do that or not remains to be seen. That seems to be a very popular thing to put off lately. But let's go ahead and get over to, let's get back over here. There's a couple more news announcements from this week I want to talk about before we get right into looking at a bunch of dollar pairs, because that's mostly what was in the news this week. Canadian GDP was an improvement over last month. Okay, so that's growth. That's good. Okay, that means better than what they were doing before. So that's a positive trend. USD ADP non-farm employment change. This is actually pretty close to what the government said, so I might actually trust this number more this week. Okay. Otherwise, this job openings number is huge. So I don't understand how this many jobs could be open and we could be nearing some of the lowest unemployment we've ever had. Really doesn't make any sense. If somebody could explain to me how this works, I just really don't understand how these numbers really don't jive is really what I'm trying to get across here. But that said, the numbers are the numbers and the news is the news. People are saying that things have been getting a lot better, and we can see how that manifests on the chart. We don't really have to necessarily take everything for what it says on this news list here. I'm going to pull up Smart Trader. Here we go. You guys looking at my charts now? You guys just let me know. I want to make sure I'm sharing the right thing here. You guys looking at Smart Trader now? Yeah. There's a little bit of a delay on the response. Yeah. Thank you. Lots of Y's. Appreciate that, Carrie. Thanks, Brian. Thanks, Derek. Awesome. All right. So we're now looking at the charts. This is the US dollar. And we're going to go to the all-time frame. Okay. We're going to zoom out. I want the 10,000 foot perspective. I'm going to show you guys the index first so we can get an idea of why we're thinking that there could be a big opportunity on the south side for the US dollar. And this isn't even considering if, places like India, China decide that they want to start, buying oil without the US dollar. There's a couple billion people in those countries. If they stop using the dollar to buy energy every day, that's a really big change in the demand for the dollar. Okay. Anybody else have any like doubts about that? If we stop using the petrodollar, what do you think that does for this chart, up or down? If we stop having a petrodollar that everyone has to use dollars to buy oil in quantity, if you want to buy barrels of oil, are we thinking up or down if that happens? Okay, if we just unpeg those two things. Oh yeah. I don't need to explain to a lot of you what would happen. There's a risk of that happening. Okay, are we saying it's going to? Nah, can't really guarantee that. Could be war if that happens, because of the massive down move you guys are talking about. So that being said, down move may not happen. No guarantees in life. But the thing that we did here right after we just raised interest rates, I want to say it was a week maybe ago here in the US, FOMC, Jerome Powell told us that the rate hikes were already priced in. If we look at the dollar, let's draw some structure on this dollar overall. Okay, so realistically, this is our outer boundary right here. Okay, outer boundary. Okay, we've had a trend on the bottom side here. Really, it started, the original trend with all of the data was down. Okay, but that becomes irrelevant, okay, pretty quickly on this chart. So I always start left to right. Just want to know that that's how the process works for me. I'm not going to leave that on the chart, but reality is that this is where the trend was for a long time. Okay, and we broke out of this rising wedge that we were in. Okay, and now the market is making somewhat of a retracement upward. Okay, so overall, we haven't made a high higher than this previous one here. Okay, we have not. Okay, so we're still much lower than that. Interesting part is we could pull a fib and see where we are. Always pull a Fibonacci ratio. Okay, just check out where we are. Looks like we just tapped our 618 up here. You guys can see that here. We just tapped it right here. Our little, what we call the golden ratio. I'll put this big, yellow circle over that. You guys see that 618 retracement on this big downstroke that happened here? Okay, so the other thing to pay attention to, not only are we at that neat little 618 level there, I'm going to go ahead and clear this out. Okay, and I'm going to draw a box. Okay, and really what this market has been doing for many years has been staying I'm going to just draw this range from current market price where we are now to the bottom where the market's turned most. Okay, so where we are right now is an impactful price. It is an impactful price. The market opened here just before this massive burst. Oh, hold on. Extra. Got a little extra there. But just before this massive burst here, this is an open price. Okay, it was also a closed price. Okay, this is really somewhat of a little pocket that happened here. Lots of activity at this price. Okay, so when we came back down from this outlier of a price out here, okay, this one, that's an outlier, okay, of this range that we were in for many years. Okay, for all the way back to 2014, we've been paying prices in this box for the most part, minus short periods of time where we popped out. Okay, which is kind of what I'm highlighting for you guys. When we did pop out, the market tested price right here. Okay, so this price where we just tapped at our 618, our golden ratio, okay, is for whatever reason important. I don't know why. You might. Great. Good for you. I don't know who your guy is, but the bottom line is it doesn't matter what anybody thinks or what anybody wants or what anybody tells you. It only matters what you can manage in risk. Okay, so I think this dollar could take a bath. Let's come down to a little bit of a lower time frame and take a little bit of a tighter look at this thing on the weekly time frame. Okay, we made this high 2 weeks ago that we tested this little target, this price target here. Okay, we made that high 2 weeks ago. This is a week chart. We have not been able to get above it since then. Okay, so let's come down to the day chart. Take a closer look. Okay, you guys, I'm going to go ahead and clear all of this stuff out. You guys already know I'm biased south. There's no hiding that at this point. Okay, the other thing is, am I making higher highs or higher lows right now? This is the day chart that we're on. Okay, this is the day chart, and one of my favorites to do analysis on for trend direction. And this is what I'm looking at. I'm looking at a lower high that just formed a few days ago. And the fun part about this, we can pull a fib on this little range here, even this little guy. Okay, we may see a little bit more push. We're at about the 5.0 right now. But that being said, all the fun stuff, okay, I already want to sell the crap out of this. Because our central bank told us that we were priced in right over here at this other high. Okay, that's where they told us they were priced in. So if he's going to tell us we're priced in so the stock market doesn't fall, then that usually is going to mean that we're priced in the bond market too. We're probably priced in every market for his interest rate change. So that being said, let's go and look. I think we opened one of these last week, and I'll go ahead and open that one first. We'll go over to the Euro USD, everybody's friend. Okay, the most heavily traded instrument in the history of instruments. You guys can see I'm already in. I got in this a couple of days ago, a little green arrow here. And I was very immediately excited for the almost zero drawdown that happened. But I'm gonna go ahead and get rid of the entries that I've got here so I can show you guys what I'm looking at and where I'm looking to get in. Actually, this trade I opened first last week before this prediction even really happened. This prediction really happened a few days later, but let's change the chart settings here and get rid of my active orders so that you guys can see some unadulterated charts here. Here we go. We've got one more big announcement happening at 10, so we might see a little bit more volatility on the dollar today. Let's just say I'm not concerned about that because that's really the only big announcement left this week, and the rest of the news came out good. I'm kind of just going to assume that that's going to overpower whatever happens with the ISM manufacturing number. But this is what I'm looking at on the euro. Okay, there's our all-time on the top side, all the data. Okay, here's the bottom. Okay, I'll try to tie this in as tight as I can because we've got some impactful prices that we are near right now. So that's really what I'm looking at on the bottom. Okay, so this is a little bit uglier on the top. I'll make this prettier. I know some of you are a little OCD with your trend lines, and that's okay. But right now, we're on the monthly time frame. How many of you looking at this are thinking, I want to buy this already? If you're not ready yet, I understand this is a monthly time frame. How many are you thinking you want to buy at this price? Is this a low price or a high price is the real question. All-time data. This is all the way back to 1993. Just type in the chat box. I want to make sure you guys are alive and breathing. Is this a low price or a high price? If I'm a bank and I have billions of dollars and I'm going to invest my billions of dollars, am I buying dollars right now or am I buying euros? What do you guys want to do? You know, I'm trying to make this as obvious as possible. But let's zoom in. Let's come down to the week. Oh yeah, Pat, that's what I'm talking about. If I'm a bank, I got billions. Looks like a great time to buy. You know, looks like a great time. Looks cheap, real cheap. Oh yeah. You know, so if I'm a fat cat, you know, lots of money. I got billions. You know, the easy decision is to buy here. In my opinion, and the reason why is because I can get out pretty quickly if things don't go my way. If things don't go my way, then I can always dump pretty close. I mean, right here I could dump. These are some prices we haven't seen in years. Decides it wants to go under there, I might want to get out of Dodge. In reality, I've got a trend line that we're above right now. If we get under the trend line, I could get out. Do all sorts of things. Bottom line, there's a heck of a lot of upside opportunity on something that has been long-term up, and it's, you know, at a low. So here's our current market price in blue. And what I think could happen with this thing, and what I think is really fun, is just to pick a really, you know, real pretty formation that happened at some point, because the market likes to come back to prices that it worked really hard to get to at other times. And just looking at this here, does it look like we worked really hard to get to that price right here? Let's go ahead and circle this. Does it look like the market worked hard to get there and to leave? And then it came back. It was there before, came back later. For some reason, the market likes that price, right? Let's circle all the times that the market fell in love with this price and then they broke up later. Everybody's had a girlfriend like this. You can't figure out why you broke up, so you end up back at this price and then you break up again. But I don't know, I'm making jokes now, but you guys get the point. Okay, you just keep ending up back together. Doesn't matter if it's years later, 4 years later. Everybody tells you guys this about relationships. The market does the same thing. The market has relationships with price. Okay? The Euro USD flirted with this price in 2017 and 2018. The market still thinks this price is hot now, I bet. So that's pretty far away. That's 700 pips away. Okay, so do I want to trade all the way there? Probably. Do I want to take profit as I go? Probably. So let's come to a lower time frame. Let's come to the day. Okay, and the fun part about the day chart here is that, and I'm going to just reel in this all-time trade that I've got here. So you guys are already seeing, I'm looking at, risking 300 pips to try to capture 700 on this position trade that's here. That's the big long-term play that you would want to play super small. Okay, if you risk a 0.01 in that equation, micro lot, you're risking, $30 to try to make 70. Very not stressful way to trade, in my opinion. So very not, just my opinion. Okay, so risking $30 to try to make 70 bucks is not scary to me. Everybody's got their thing though, so I'm just trying to make this as dumbed down as I can. Okay, so this is a low here, and this is a higher low, and this is an even higher low, and this is a high, and this is a higher high, and this is a higher high. And anybody think that there's a chance? Y or no in the chat box. This could be my next higher low right here where we are sitting right now at this price at this exact moment today. Could this be our next low? It could be. It could also come a little bit lower. Okay. Point is that this is making higher highs and higher lows. Okay. I'm not telling you that this exact moment there's going to be zero drawdown if you decide to buy. That's not how this works. Okay, what we're doing is we're looking for patterns. Okay, we're looking for places where the market has deemed prices to be important. Okay, that's really what's the main idea here is, does the market think that this price is important? Has it worked hard to get there before? Because if it's worked hard to get there, it'll work hard to leave too. Okay, that's the interesting thing about the market. Okay, is that if it works hard to get to a price, it will work even harder to leave sometimes. Okay. I'm going to get rid of some circles here. So now I've got some extra circles I don't want, and I want to draw some fresh ones. Okay, so we're going to zoom in more. This is the way that I like to go about this. First of all, I'm going to suck this in. This is the stop loss that I had drawn here. That was my all-time one, was all the way down at 107. If we get down below 107 and on the bank, I might decide, hey, they're going to parity. I'm going the other way. But as far as it goes for right now, we're making higher highs, higher lows. Okay, on our day chart, this is our hourly chart we're on now. So we're just zoomed in more, okay, closer. Okay, so this price that it's at right now, okay, right there, we danced all over it right here. Okay, we hit a little resistance there, right here, over here. You guys get the point yet, I hope. Okay, so reality is the market cares about that price. We're at it right now, right here. There you go. Okay, so the other fun part, could pull a Fibonacci and see what this looks like. See what we got. Okay, we are just above our 236 level here. So we could come, a few pips lower. Who knows? But we're at a very important zone as far as I'm concerned. Okay, I've got relatively small risk here. My extension level above, okay, that this is showing me short term is close. Okay, this is what we're talking about. That, okay, pretty close. But that said, risk reward on this trade, pretty legit. I'm already in it, just so we're on the same page, everybody. This is me in this trade 25 pips ago. I'm in this a few times. NZD USD, I'm actually in twice. So let's go ahead and check that one out. You guys want to know more about that one, I'm sure. because this was actually part of our last big prediction on the Kiwi that actually went really well. I think under the radar too well. But we'll go ahead. I'll show you guys more about that here in a second. And I think it's going to continue to go. I think we were just a month behind, or a month early, I should say. But it did go right from the 618. And this is going to look like a familiar drawing that I kind of like what I just did on the last chart. So there's our upline there. And on the bottom, we've got that. Okay. Does that look familiar? Not quite as emphatic as the euro. You know, in this situation, what do you guys think? Up or downtrend? Okay, since 1993, is this an uptrend or a downtrend? You're thinking about all of it. You know, is this an uptrend or a downtrend? You know, I'm trying to make this just blatant. I'm trying to be, I don't want to be a jerk about it, but I want you guys to ask yourselves things like this while you're trading to make more logical decisions. Okay, so realistically speaking, if I go ahead and I pull this trend line here, okay, that was a downtrend for many years. Okay, you're talking 2-3 years. Okay, here's another one that happened down here for a couple of years. So even though this is an uptrend, it can be down for years. Okay, point is that when it's up typically for a long time, just like it is down. Okay, so the point is that if it's been in an uptrend, that's, you know, years. Okay, years of uptrend, okay. Oh, I didn't mean to hit the right click there. Years of uptrend. You guys see this? Okay, so years, you know, years. This is about a year of downtrend we've been looking at. Okay, but it's been up the last 2 months. Okay, so I'm gonna get rid of some of these extra lines here, but I just want to give you guys an idea. This thing doesn't change trend direction often. Okay, I'm gonna go ahead and pull my fib here. Okay, and this is on the monthly time frame. We did get just about to the 5-0. Let's come down to the weekly. And this is where it starts to get fun on this chart. Okay. And here's our weekly. We're a little bit all the way down at the bottom of our A boundary. Okay. We haven't broken this trend line that we had on the top side. Let's actually clear this out because we've been up for a while. Okay. A couple months, really. But grand scheme, we've been down for this period of time right here. Okay. That is a downtrend. Okay. Has been. Okay. That's something that we all need to pay attention to. The thing that is exciting about this, okay, and in my estimation, I think is the reason why I like this so much, okay, is because I do think that New Zealand is very far away from Europe. I think that they've got a relatively, you know, risk-off type of well, when it comes down to it, their debt to GDP rate is probably better than most countries on Earth. So I think they are they can balance a checkbook at their central bank and at the government in New Zealand better than our government in the US. And that's really what we're looking at on this chart. I think that New Zealand can balance a checkbook better than the US government. Anybody have any disagreement with me? I'm an American, full disclosure. Okay, so that said, okay, let's come down to a lower time frame. We zoom in, keep zooming in. We zoom in on all these. We start on the big time frame and we zoom. Okay, so this is what's been going on recently. Okay, if we look back for most of this year, okay, this is really the end of January. Okay, this is what's been going on. Okay, and you know, you guys hear me talk about M's and W's all the time. This was a W that happened here. I think we traded this. Okay, there's a W that happened. Okay, we broke out. We had this little trap. We came back and tested it, and we broke out and made a new fresh high. Okay, so we're already past the W and into an uptrend. Just my opinion. Doesn't mean it has to go up in a way, you know, to space. It'd be really nice if it did, but I'm just going to assume it's going to keep doing what it's been doing for this whole year. Okay, for this whole year. Okay, why not? We're right at the edge of our AB boundary on our most recent trend here. Okay, this is what it's been doing. Okay, you guys see that here. Okay, this is a day chart. So anybody that waited longer than a week, that bought this year, you know, since February, made money. If you bought it and waited longer than a week on this trend for the last 2 months, you made money. If you waited long enough. So if that's the case, and I can look at this and say that that's what happened, then I'm going to assume it happens again. Okay, and I'm just going to trade this to the extension. Okay, what I'd like to do is get this out of the way, get some lines on here. I'll show you guys where I might go. I'm already in this trade. Okay, full disclosure, I'm in it twice. I bought, rebought, you know, it's been fun already. I'm expecting lots of movement here later today, which is why we're looking at this together. And let's see. More or less, if it gets below there, there's other buy opportunities. Okay, so I'm looking at realistically stop loss below this previous low, two previous lows down here at the 686 level, with an exit somewhere around 71. Okay, grand scheme of things, do I think this can go much higher? The answer is yes. We've got to do a lot of things before we go to the much higher prices. I think that it wouldn't be surprising to see this NZD USD make a fresh high above our 75 price here. But realistically, that's really where I think that this is headed long term, is all the way up here to test these higher levels in this range. The 73.5 price is really where I think it's headed long term. So I think there are hundreds of pips here, and I think that we are making higher highs right now and breaking previous highs on this other trend that lead us to believe that, hey, it's a good time to buy. Do I want to take it all the way up to this 74 price in one trade? Maybe. You can do that if you want to try that. It may not make it there, so I would try to take profit sooner, and I'm going to try to take profit down here at this 71 price, a lot closer, and then maybe get in again and again and again and again, because that's how fun this can be. So let's keep on going. Let's see what we've got here next. Let's go to the Aussie USD, because if we know that there's action on the dollar and I'm finding trade opportunities right now, then I want to keep looking at it. Okay, I want to find more of those. Okay, if you look at this Aussie, okay, this thing's been a rocket for the last month or so. But this is going to look very similar to what we just did. I'm going to crunch this down. Okay, and what we're looking at here now, go ahead and get a trend line on here on the top. This is the very same thing that you guys saw me do on the last one. I didn't even touch that one, but you guys get the point. Okay, so let's go ahead and move this, inch that a little bit closer. Okay, so we've got very much same type of thing. Some people are going to look at this and want to, remove the outlier. Okay, a lot of people like to remove outliers. I'm hesitant to do that, but that does make it more obvious what's going on here. Okay, because this is an outlier, I think, in price below here. And this was our trend, all as of, 2018 or whenever this candle was. This is all the way back in January 1st of 2019. That was our trend that we tested then. Okay. And prior to that, this is where it gets confusing if you want to do stuff like that. This was the other one. This could be the downtrend of your life could be happening right now when people were looking at that. And the same thing goes for here. This could just be the end of Australia. Okay. But, really, because this was our channel all time, and for price to get under this line is pretty ugly for the bank down there. But this is what the range has become. It's that. Okay, so do we have levels at lower prices we can get to? Yes. Do I think that the Aussies might have climbed their way back up into at least this range? Maybe. Why not? Okay, they've been doing it for a few months. Let's go ahead and zoom in. Let's go to the week. Okay. We look at the week. How many days do you guys want to be in a trade? Go ahead and type it in the chat box for me. Give me an idea what you guys want to see and what would make you more comfortable. How long do you want to be in a trade? 1 day? What's the high number of days? Like, how many days are you going to be in a trade before you start thinking in your head, oh my gosh, like I'm tired of this CAD Swiss. It's never going to do what I want. Where's your high side? Where are you going to say like, oh, I don't want to do this anymore? 10 days, that's it? Really? 7? Okay, 10 days. You want to see a 10-day trade here? Seems like a lot of people want to see a 10-day trade. Interesting. So, a 10-day trade, as long as it takes, that's what I like to see there. 1 to 3 days. I can show all 3 of those lengths, I think. So let's take a look at this here. Okay, so I'm biased to the north. Okay, you guys already know that, mostly because I'm bearish on the US dollar. Okay, a week. Okay, that's, a lot of people like to sit in that range, me included. Okay, a week is about what I want to do. You guys see that trend line break? I feel good about it because we had a very emphatic up move that was happening for this period of time, okay, that we then broke downwards, and now we have that was our counter trend was down, and now we're breaking up, okay? So I'm thinking extension time, okay? So to me, this means that we might make it back to some levels that the market really likes again, okay? And one price that I know the market really likes, I'll get rid of this big lightning bolt here, okay? I'm gonna crunch this down again, and if I'm gonna look for an as long as it takes type of trade, and we're gonna do that first because we're on the high time frame right now, and it's no better time than the present. So let's go ahead and get a target here, and a price that I know that the market likes for a fact, this one right here. And the reason why I know that the market likes that price, whatever that means really, is that it's been to this price and turned big time a few times, right here, here, okay, over here. Okay, so that price itself is pretty far away. Okay, obviously the market can make higher highs than that. I think it will, but that even near target is 590 pips away, 550 pips away, a lot of pips. Okay, you guys get the point. A lot of pips away. Let's come down to the day. Okay, so this is an as long as it takes type of opportunity. And for this one to make sense, okay, and we'll measure this pip count on the lower time frame. It'll be more accurate this way. And 590, okay, we'll call it 590 pips. That's a lot, okay? So if I wanted to take a trade like this, and I wanted to sit in this for months and months and months and months, and maybe not months, this might happen in 1 month. I think it could happen as soon as this month, okay? I would need a stop loss. I need a place where I don't want to be in this trade anymore, where I don't want to risk anything else. Okay? And I also need to know where the current price is so I can measure what my risk reward rate is, okay? So risk reward, I want at least a 2-to-1. So if I'm going to try to get 590 pips, then, if I do a 0.01, so let's just say if I open this up and I did a 0.01 here, okay, and I bought this with, 590 pips at my limit, okay, a 2-to-1, I'm going to need a risk somewhere around, I don't know, 245 or 295 pips, 295 pips or less to get a 2-to-1 here. And I think I'm much closer than that with my red line. We're at 170. Okay, so this is a $17 risk, the way that I've got it set up now. Some traders are going to want to have a lower stop loss, and if it does dip, enter it twice, okay? And that might look something like this, okay? You might want to enter at this lower price if we do reach that price. Do I think we're going to go there? Probably not. Do I want to buy if we get there? Probably. So some people are going to set this up right now with the expectation that if it does get to that lower price, where I actually just had my stop loss in the previous example, and they're going to wait until, then they don't even have to take profit at this high price. You can take profit at the original price if you do that. Okay, so this becomes a much more fluid situation if you're going to do things like that. But my opinion, okay, that's more or less what I'm looking at for this. Wait for it. Let's stay in this for as long as it takes type of position, okay? Those of you that want to look at something like 10 days, okay, that's going to be more narrow. You're not going to want to take as much risk. You're probably going to want to take profit at places where the market gets tired. Okay, that could be as soon as this 76 price. It could be even right up here at this high. Let's measure. Let's do this the right way here. Okay, this could be inside of 10 days. 1 to 3 days is really where I think this is going to end up. Is at this 76,829 price. So I'll get rid of my two lower prices here. This is more of a scalp. Let's come into our 2-hour chart. And I'm picking the time frames I'm zooming in. That's the way I like to look at it. I'm just going to zoom in. Okay, my stop loss here, I really would want it below a previous low. Some people are going to put that here. Okay, if you wanted to scalp this. Personally, I like this level here below. I don't think this is an incredible trade from this price, but I think it would be a great trade if you entered it twice. Okay, so that being said, I'm already in this one. I may enter it again right now. It's only 16 pips off of this current price, so I don't really want to mess with that. I'm already in the NZD twice. I'm actually up in one of those, down in the other, because I did try to pile on to that position. But let's go ahead and check out the dollar Swiss. Okay, this one I have been in, gonna stay in. This one is lots of fun. This one might have a 10-day trade in it. I don't think I had a 10-day opportunity on that last chart, so we're gonna see if we can find that 10-day here. I guess that's your limit, Neville, not so much what you want. Most of you are looking for a week or less. Now, really, I like to close out pips on Tuesdays after these sessions. It's really what I like to do. So, because really the week gets started there. A lot can change on Tuesday, Wednesday, Thursday. There's usually lots of announcements on those days. And if I'm too lazy to look at all that stuff, which most of you are, and myself included, I don't want to read news 100% of the time. I think that makes me not unique, but overall, naked chart. Okay, you guys think this is a downtrend or an uptrend? Oh, 2 weeks, Neville. Okay, fine. Okay. You guys think, just naked eye, you guys think downtrend or uptrend on the dollar Swiss here since 1993? Sideways since 93? It's been sideways for quite some time, Francois. I see what you did there. Eyeball scanner says downtrend. Love it. You're not wrong. There are no wrong answers is the fun part, because there's more data that we don't know about. And the trend lines that you guys saw me draw on the other charts are a little bit less obvious here. Here's the downtrend, okay, and this one on the top, okay, this is really kind of what it was, but we just broke out of that. Okay, so some might call this the overbought range. Okay, this was the downtrend for many years here. We had this falling wedge. We broke out. This is a backside test. Most traders were licking their chops when we broke out of this range right here. Backside test. This was buy city down here. Everybody wanted this price. Okay, that was right after the Swiss franc unpegged from the euro, I think. That was right when I started trading. A Forex at least. And that was many years ago. It's been pretty sideways since. Okay, so anybody that said sideways, you're pretty right. Okay, the overall trend though has been down. It's been fighting to try to come up for many years and failing. Okay, so if we clear out all this stuff, because it came down a lot faster than it's been able to come back up and recover. Okay, that's really what it is. It's been recovering much slower than it fell. And if it's been falling most of the time, this is a trend right here. Okay, that's a trend. Okay, that was a trend. We broke out down. So, my opinion here is that this is a down trend and it's going to continue being such. We zoom in on this more, and I'm going to make this more obvious with some, here's a high, okay, and here's a lower one, and here's a lower one, and here's a lower one. Okay, so all those things considered, okay, I strongly believe that this is a downtrend. Some of you might have even drawn your trend line as low as something like here. Okay, that might have been what you looked at. Maybe you're looking at this right here, especially if you're watching this presentation and still paying attention. You're definitely looking at this now. Okay, so maybe that's where we go next. Okay, fun thing to put on here. I had a tool on this the other day that I looked at. It was the supply and demand tool. I think this might be the biggest area of demand in the world. So I'm going to turn this on. If you guys can see that, this is the weekly chart. So this demand zone here, the bottom of it's at 70.706, and the top of it is all the way up here, 1,000 pips above it. So this is the biggest demand zone that I know to exist, okay, that this tool finds anywhere on any chart as far as Forex goes. So just trading to that, okay, just to that demand zone, doesn't mean we go inside of it. It does mean the market may want to test it, like real bad. It wants to touch this hot stove. Okay, that price is far away, like really far. And this could really just equate to more, unrest as far as the geopolitical scene goes. And, let me just run through the list of things that have happened since the beginning of last year. Do you guys remember when Iran was bombing Israel? Does anybody remember that? Did you guys forget about that? If you're in Israel, probably not. but it happened. Okay. And then the US left Afghanistan, and we decided to, they allegedly, stopped some terrorists that turned out to be, a car full of women and children. Okay. That happened shortly thereafter in Afghanistan when we left, and the Taliban took over after 20 years of fighting the Taliban out of there. And the government here turned the Taliban into, I want to say, the number 24 largest military on earth, with all the pallets of money that we left in just Afghanistan. And then after that, we have the Ukraine invasion to talk about. What's going to happen next is the question. Is North Korea going to try to make a move on South Korea? Is China going to make a move on Taiwan? Does anybody know? There's nobody that knows. Okay, so if there's uncertainty like what I'm mentioning, and it just seems to be a train of just garbage happening right now. I can't believe what's happening in the world. I miss 2019. I really do. I miss 2019 so bad. But that said, okay, we're here to make money. Okay. The reason why I'm saying all these things is because the Swiss franc is a shelter currency. The reason why is because it's diversified and they sit on everybody's currency. Okay. So in times like this, that the world is really going to be going through a lot, things like the franc might be strong. There's also a lot of people that think that the Swiss franc is the original crypto because it's a neutral country. And if I wanted to launder a bunch of money, there's a lot of movies about doing that with Swiss bank accounts. So, maybe some of those movies have a little bit of truth. Maybe they don't. But the point is, during times of war, the Swiss franc is typically going to be stronger. Okay? Simply because they're not going to war. Because they're a neutral country. Okay? Euro USD, I think, up, Francois. I think the US dollar is going to take a little bit of a bath. But we'll see how that works out. No, we did that one first in here. We went long. I did, at least. I don't know what anybody else did. But this is what I'm looking at here. Okay, I'm looking at 83. Okay, that's really far. Okay, 83 cents per franc. That's 900 pips away, 960 pips away. Let's zoom in. Let's come to the day chart. Okay, I still have my supply and demand on here, actually. Might as well leave this for a second. This is a fun indicator. I actually kind of like this one. I don't know if you guys are familiar with supply and demand. Well, it's not about whether you're winning or losing, Francois. A lot of people look at a drawdown as losing. You don't lose until you hit your stop loss, brother. So, supply and demand. Yes, this is supply and demand here, people. Let's come down to, these boxes are just showing prices of areas of price supply and price demand. So let's zoom in here. I got a lot going on in this chart. Okay, so our shorter term opportunity, okay, there is an active demand zone. You guys can see this pretty close. The ones that are darker are just mean that they haven't been hit yet, is really all that means, okay, and that they're still active. There's one that's darker on the other side of this trend also. So my opinion, okay, and based on this indicator here, this is where I want to test next at 901. Okay, so I'm already in this trade. The long term, I don't care how long it takes trade, is this 83 level all the way below. Okay, the shorter term, maybe next week trade. Okay, maybe 2 weeks trade. This is probably our 10-dayer, Neville. Would be this line down here below. Okay, so let's come down to our day chart. Okay, now that we've got a breadcrumb for ourselves at this 901 level, and I like this 901 level. Okay, let's find a shorter term opportunity. And looks like I've got a supply zone right above here. So this might actually be a pending situation. For those of you that are not already in this trade, this would be a pending sell, I think, up at 929.55. 929 is probably close enough for government work. I think a stop loss in this slightly higher area above. I want to have at least 2-to-1 on my money. I didn't mean to change the color of my blue line here. Entry line. Okay, that's really what I'm looking at as stop loss. And my limit, because we do have a demand zone, we may come up here and make a little double top. If we make a double top, I still want to win this trade. So that's really what I would be looking at. It's a slightly wider risk than some people are comfortable with. I know some of you are real stingy on the stop loss. This is 166 pips. Some of you are going to want to come down to this lower time frame. You 1 to 3 day people. Okay, and I know you know who you are. You 1 to 3 day people. Reality, I think it could come down right now. I mean, the trend trade is a little bit closer than I think I am right now with my red lines. But we've actually got a 618 up here above. So reality is some of you may be looking at a trade something like this at the 618, get in at 93.1 and sell it on the nearer term up here at 912. The reason why I'm more conservative with my entry price at this higher level and my exit price is simply because I'm using less data to make the decision. Okay, so I want to be stingier on the entry. I want to get in at a higher price because I don't want to be overzealous. Okay, so all things considered, this could fall right now in 10 minutes as soon as this next announcement comes out. I don't know, you don't know, nobody knows. Okay, so that's why you have a stop loss, and that's why we end up further away in certain circumstances. How pips above that long red wick? I'm not sure which red wick that you're referencing here. How many pips above? I've got my stop loss on here at 93878 is where I'm showing this. I think my actual stop loss is at a different level, I think. But I got in this 3 days ago, so it's a different game. Yeah, my stop loss is in a different place. I think it's probably higher up. I can probably show you that, actually. Save. Oh yeah, that's actually pretty close to where mine is. I'm a little at 94 is where mine is. Why there? Because it's outside of my AB boundary. And, you know, if I'm still within my A, I'm still in play. And that's how I like to think about it. Because I'm less likely to get hit. The trend has to change direction on this time frame for my stop loss to get hit if I'm outside of my boundary. Otherwise, we're going to keep creating lower and lower Fibonacci ranges with lower highs and lower lows. And I just want to be out of those ranges with my stop loss so that I don't get smoked right before the market goes my way. That's really what that's about. You know, so you can, there's a lot of different schools of thought on this. That's just what I was taught, and that's the way that I like to think about it. But we've got just a couple of more minutes here, so I want to make sure I show you guys as much as I can. Oil has been a popular one. If you guys have another particular pair you want to see, there are opportunities, in my opinion, lots of other like every dollar across right now. I do believe there's an opportunity, but I think a lot of those are easy to figure out if you've already seen the rest of this. But let's go ahead and check out all. This is oil, okay? And oil is getting very interesting, to say the least. The government here is talking about, I don't know, they're probably going to just release a million barrels of oil per day from our strategic oil reserve so that they can keep gas low enough to get reelected. You know, it's cheaper than campaigning. I think is really US 500, the S&P 500. I don't think I have the feed in here. But let's go ahead and draw some lines here. Okay, this was our downtrend on oil for many years. Okay, all the way from the crash, the financial crash, the end of the world that happened in 2008. I was just a young buck. I was actually still in college for that. I was actually taking a macroeconomics class when that happened, which is really interesting when they started teaching us about helicopter money. Ben Bernanke was a very interesting person. He used to run the Federal Reserve here. Pretty terrifying that an entire generation of people were taught to think that way, that you can create inflation with a printer, and that's literally in the book that I was reading for school. So all those things said, yeah, helicopter money, Google it, Francois, it'll blow your mind. Yeah, helicopter money. That's what causes things like this. Yeah, Google it, I'm telling you, helicopter money. But that said, okay, so we are in an uptrend. You guys can see this. I'm going to get rid of our old downtrend that no longer exists, okay, because, well, oil's not going to necessarily break this trend for a while, okay? We've been at this uptrend since, you know, this downstroke here, April 2020. We actually had negative price all the way back there. That was when we, that was the 15 days to flatten the curve and the only negative prices in the history of oil. So that said, okay, we're on an uptrend. This is very clear cut. Okay, we're at $100 a barrel right now. Okay, that used to be a terrifying number. We have broken out of this range. Okay, really, we have a new fib range that should be on here. Maybe it'll show me on the week. And it is, okay? So this is really what I'm looking at. Okay, I think that this 618 price level down here happens. There is a short-term buy opportunity from there, and I think that we do come up all the way to these much higher prices. Okay, I think that there's a strong chance we could get up to these much higher prices. Europe is actually forecasting prices in the $92 range for next year, which is a little bit lower than my blue entry line here. Okay, but if you are looking at oil, and most of you have the opportunity to trade things like oil, if you haven't done it before, I suggest trading it in a demo account before you trade it live. The lot sizes are not the same, the leverage is way different, and the movement is crazy fast versus what you're used to. That's not a bad thing. It just means that it moves, it makes money, and it loses money. Okay, so I'm trying to make sure you guys are prepared for things like this. But I think that this could be an epic opportunity from $88. If you come down to the day chart here, to just trade the consolidation move, because really I think that's where we're headed. I think it's an election year. I think they're going to play with us as much as they can. It could come up right now. You know, we're at $100. This could be the last time we see 100. Okay, but does that mean I'm a good? Does that mean I'm a buyer down here at 88? Yes, that's what that means. Okay, so we've got lots of previous highs and previous lows. If you guys turn on smart resistance or smart support in your charting software, that's usually where you might want to play a move. You could turn on smart pivots too. That's our 107 price, might be where I want to get out later if I do buy from this blue price. So I need a support level. Okay, there's lots of them, absolute tons of them. So here's another one that's far away from my price. And this would be a pending situation. I don't think that's a good idea necessarily to buy this right now. We are in a little bit of a pennant. So if you are looking to buy right now, actually, let's talk about that. Because, you know, it doesn't matter what I think. Good idea, bad idea. It matters if you can protect your risk. And this is what I think is happening. This pennant, okay? So let's zoom in. We can probably find a right now trade. Everybody likes the right now. Let's give the people what they want. So the right now opportunity, my opinion, my estimation is right here. We'll draw this quick because we're out of time. Okay, stop loss below. We're just going to use yesterday's low. Okay, we're going to pray that it doesn't come back down. That's literally what this is, what we're doing. Looks like it's moving up right now, as it should, because the economy is trucking here in the US. We are adding jobs, super low unemployment. People are driving to work. They're going to buy gas to do it. So I think $104 is very, 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 very possible. So as far as short term goes, I think that's what's going to happen. But we're a little bottled up here, okay? There's really no way to know what's going to happen at any given time. You don't know. There's no such thing as a zero drawdown trader. We'll have confirmation on long-term trend as soon as we break out. And if the market does something like this, okay, we break out to the top, we test, we go. That's what I would expect. $200 oil wouldn't be crazy, just because of all the other things that I mentioned a few minutes ago that we've seemed to have, you know, just kicked a lot of beehives in the last year and a half. But so for the time being, do you stay out? Francois, I can't make this trade from my Forex account. If I could, this is more or less what I would be looking at. Okay, is this short-term sideways trade? It's an indecision, so it doesn't necessarily mean you can't trade it. Indecision is a decision. Indecision typically means sideways, which just means you have to treat it as such and not look for a long-term move because we don't have confirmation for it. And that's really it. There's just no confirmation for a long-term direction. But if you do have questions, Antonio, brokers at 123trade.com is the email address. Again, I'm Will Bridges from the team here. Those of you that showed up late, maybe you're here for the first time, just kind of, floated in here. But we've got a big opportunity. I think the U.S. dollar is really where I'm heavily invested in the U.S. dollar right now versus the size of this account. Okay, all of these are dollar trades, fairly sideways for the moment. Okay, I've got £1 Swiss trade that I just had open with a robot. This was with the active trader, so hopefully we recover there. But I think the dollar is going to take a little bit of a break, and let's just say the pound's at a low. So hopefully the pound gets a little bit of a push. But I'm basically short dollar pretty much everywhere. I appreciate that, Francois. I like to try to impart as much knowledge as I can in here, and most of it's really just I've lost trades before, and I know that it's not impactful for me if I lose a small one. I've won, my estimation, probably more trades than I've lost over time. This year for sure, I've won 80%, I think, this year. In this room, I think, in this trading account. But, that being said, it doesn't matter what your win rate is. It matters, how big your losses are. It's not about how high your ceiling is. It's about how high is the floor. Okay, if the floor on a loss, like a bad day, is going to blow out your account, then you're going to have a lot of really rough days. So, the thing about it is just, making the floor a less scary place. And that's really what all this is about. Because if you stay in the game, hey, you're still in play. That's what it is. So thanks again, everybody. Thanks for joining. Hope you guys learned something here today. Hope you guys picked up something good, and I hope we can make some money this week. You guys have a wonderful rest of your day. Enjoy your weekend. Be good, or be good at it. Take care, folks.